Supply and demand trading is one of the oldest styles of trading in the book, and you've probably already either heard of it or maybe you even tried it without much luck. But I'm here to tell you that most people misunderstand both how to identify supply and demand and what supply and demand even is in the first place. So in this video, I wanted to give you a framework for supply and demand. By the end of the video, you will never doubt your levels again. You will have much higher confidence in your zones, in your levels. I'm going to give you real examples in real time from the trades that I take live every single day on this exact YouTube channel. So if that sounds good to you, make sure to smash up that like button and subscribe. And without further ado, let's get right into the video. So supply and demand is basically an imbalance between buyers and sellers. The only way price can move like this is if there is a heavy imbalance on one side. Obviously, since we moved higher in this example, there's an imbalance between buyers and sellers favoring the buyer side, right? More buyers than sellers. It's as simple as that. If there's more buyers than sellers, price goes up. If there's more sellers than buyers, price goes down, right? So supply and demand basically aims to capture an area where that imbalance actually originated from. Because once price moves away sharply from a specific area, that means that that area is where those large orders, where that imbalance actually happened. And so we know that large institutions, or maybe sometimes even just large individual traders, were taking positions at that level. And if they're taking positions at that level, then that level is going to be of interest for us, right? Because they probably know something that we don't. They probably have more power than we do over the market. So we aim to kind of jump on the bandwagon with them. So the way that we're going to define supply and demand is a consolidation followed by a strong continuation, whether it be up or down. In this case, we would call this an area of demand because it was an area where we saw an increase away from that consolidation, but the opposite would be called supply when we have a consolidation and then a sharp decrease or a sharp imbalance on the sell side where we see a massive move downwards. We would call that supply, okay? So demand is bullish, supply is bearish. If you are familiar with ICT concepts, a lot of people call this an order block, a bullish order block or a bearish order block. And basically, it's the same thing, right? You're just capturing an area where there should be a lot of orders resting. Now, a lot of people also don't talk about the fact that supply and demand doesn't only work because institutions are buying at that area or selling at that area, right? It works because it's also going to be an area in which there are a lot of traders that are losing money. Why? Because when we have a consolidation, that usually means that buyers and sellers are going back and forth with one another. But if we have a sharp break away from that point in which those buyers and sellers were having that battle, then one side is going to be heavily underwater, right? In this case, if we're having a consolidation and then you sharply move to the upside, well, now anyone that shorted in that area, meaning that they're betting on price moving lower, is now going to be heavily underwater. And so when price comes back down into that area where those shorts may have originated from, they are going to be getting out of their positions, which is just another reason why we may see orders sitting in that area, because we have trapped traders wanting to get out of their trades, okay? So how do we actually identify an area of supply and demand? In this example, we are going to look at an area of demand. And the area of demand is going to be right over here. Now, why is this specifically an area of demand? Well, supply and demand, more specifically, is going to be a two-candle pattern. Essentially, what you want to look for is some sort of consolidation candle, which is going to look something like this, right? It can be any color, it can be up or down, it doesn't matter as long as you have a small candle that represents consolidation. Because if, for example, this candle is an hourly candle and you drop down to a 5-minute candle, you may see price action that looks like this, right? That's what this candle represents. Now, the following candle, in this case, since it's an area of demand, is going to be a massive increase in price, okay? You just want to look for a large candle away from that area, okay? So usually you'll get something that looks maybe like this, all right? So this is basically what demand looks like. You're basically getting a consolidation followed by a massive continuation. And if you're confused, don't worry, we got lots of examples. But when we take a look at this price chart specifically, what we're going to see is that we have that exact situation. We have a little bit of an indecision candle there. We have an area of consolidation, right? The way that we can tell is because we have those long wicks, but we kind of closed right back down where we started. So this is going to be our consolidation candle, but guess what? Look at the candle right after that, okay? This candle is basically screwing over anyone that got short on this candle right over here, okay? And look at how price actually comes back into that area right towards those previous highs on that candle and actually holds for another massive move higher. So this is exactly what we want to see. We want to see price coming back into that area of demand where institutions and traders got trapped, and look for a continuation higher. So this is a great example of demand, okay? We have a sharp move higher. At some point in that sharp move higher, we have this consolidation, but then we continued, right? We had the consolidation and then the continuation. So as we can see, obviously, once we go back into that zone, that level of demand holds and we continue on higher. Now, something that a lot of people also don't really teach is the fact that we have to be logical here, okay? If a wick comes into that area of demand and just barely touches that level of demand, does that mean that all orders were taken out in this entire zone? No, it does not, right? If this is an area of unfilled orders, the only area that got touched, right? The only area that actually got filled, where orders got filled, is right here on that wick. There's still all of this area below that has still not been filled, right? Those orders are still sitting there potentially, right? So a lot of people will say that, oh, well, we touched that demand level, so it's no longer a fresh level of demand, or we touched that level of supply, so it's no longer a fresh level of supply. But in this case, we can still assume that there may still be orders in this area. And so this is still going to be a valid level of demand. And so even if we miss this initial entry point here, there may be a second chance to get in. And spoiler alert, there is. So now let's take a look at what happens when price revisits this level of demand, and actually goes a little bit further into that level of demand, okay? We're going to see price come down in, okay? We're going to enter that level of demand, and look at that, it holds a second time, okay? And we go all the way back up to new highs. And even on the second touch, we were still barely able to get into that level of demand. So who knows? I don't even know. Let's see if this area of demand actually gets revisited a second time at some point. Let's see, and it does all the way over here. And you can see it doesn't hold perfectly, but it still offers a small reaction after getting kind of wicked through, okay? So that is the power of a level of demand. Now let's take a look at a level of supply. All right, so here on the screen, we have an example of what we would consider to be supply. In this case, this supply was generated because of news. We had PPI. This was actually today at the time of filming this. And we actually took some good trades today that we're going to review later in the video, so do not go anywhere. But as you can probably guess, this is an area of supply. Why? Because we have consolidation followed by a massive runaway move to the downside. So of course, we are going to have trapped buyers in this area here. So let's see what happens once price revisits this area. We come all the way back up, and as soon as we enter that area of supply, look at how volume starts to increase and we get this massive rejection here, okay? Volume is something that you want to look for in supply and demand levels. Why? Because if there are orders sitting there, then you should be able to see the orders get taken on the volume, right? You should see an increase in volume because there are orders there, and orders are what make up volume. Now, something I want to point out with supply and demand is that in both of these examples that I've shown you so far, both of the levels were a part of the bigger trend, right? If we take a look at the overall trend, we can see that this obviously created a lower low, right? So we are now in a downtrend, okay? In the previous example, we saw that we were making higher highs and higher lows. So this is an uptrend, right? So something that you have to be aware of with supply and demand trading, and with the style of trading that I teach in general, is that you always want to be following the trend. If we are making higher highs and higher lows, look for buys. If we are making lower lows and lower highs, look for sells. In other words, if we're making higher highs and higher lows, look for demand levels. If we're making lower lows and lower highs, look for supply levels. Now, you may be thinking, because I'm making this video, that I am a big supply and demand trader. But I actually don't trade supply and demand blindly. I add another level of confluence to it. And what is this other level of confluence? Well, the other level of confluence is basically expanding on the idea or the logic that we already use for supply and demand trading. And that is, where are the most orders sitting? If we kind of continue on that path and use that logic, there's one more specific strategy or one more specific concept that also focuses on finding where the most amount of orders are sitting. Can you guess what it is? Obviously, those that have watched me for a while, you can already guess, but it is going to be liquidity, okay? Liquidity is essentially the idea that when highs or lows are formed, stop losses are placed above the highs or below the lows, okay? The idea is that traders are entering the market and then they want to put their stop loss at a safe place. The safest spot in a downtrend is going to be above highs, right? The safest spot in an uptrend is going to be below lows, okay? So let's take a look at this example one more time and see if we notice something a bit interesting, right? When we take a look back at the area where we had that initial test of this area of demand, okay, what did we form right there? Okay, we formed a low, didn't we? So now we have a low resting just before, or basically right in, that area of demand. And so what's going to happen now is not only do we have those unfilled orders resting in this area of demand, but we also have people's stop losses resting below this low. And so this is now what I call an order zone. It's like Pokemon, right? You got your supply and demand, and then once it evolves, now it's going to be an order zone, okay? It's the second version, it's the level up from supply and demand. So this is now what I call an order zone, and this is what I look for when taking my trades. Now look at this trade example here. We take that low out, and immediately that is where we react. We take that low out, take some stop losses out, take some liquidity out. We also have the overlapping level of demand, overlapping orders. And guess what? We go all the way back up to the highs because, again, this is a trend trading strategy. So imagine what's possible when you get trades like this, right? In a worst case scenario, let's say you're entering at the close of this candle and your stop loss is below the end of that zone, which is pretty generous. And that's kind of a wide stop for me. Personally, I don't like using stops that large. But let's just say we target the highs, and in this example, we would have made a 3.84 risk to reward trade, right? That is quite a good trade, and this is trading it pretty sloppy, right? Now, if you are interested in learning more about order zones, I have a full bootcamp on them for free on my YouTube channel. It's the only playlist that I have on my channel. It's 100% for free. And if you still are struggling after that, and if you want a little bit of more personal help, a little more in-depth videos that kind of tie everything together, I also have the Simple Trader Blueprint, which is $197, and it's a one-time purchase for life. You get an exclusive Discord role where you can get 24/7 support from me. You can ask questions whenever you want, and your top priority, as well as also always paying the cheapest price, because the price will go up the more videos that I add onto it. So link in the description if you are interested in that, and of course the playlist you can just find on my YouTube channel. Now, I barely even scrolled, and look at this. There's another example right in front of us, staring at us in the face. So can you spot it? Can you spot the order zone or the level of demand in this example? It's going to be right here. We have that classic 2-candle pattern, okay? We have a little bit of a consolidation here, and then a massive continuation to the upside. So this is where an imbalance occurred, right? More buyers stepped in here versus the sellers, and so anyone that sold in this general area is now way, way, way underwater. And of course, there is the idea that institutions may have been loading up on their positions here, okay? Now take a look at what happens, right? What's also here? We have a low right there, liquidity resting right there, okay? Come right in, wick all of that liquidity, take out all of that liquidity, have one more wick down, take out this liquidity, the low's there, but nonetheless, within the zone, we turn around and we go all the way up to new highs. Again, even if you're trading this in a pretty sloppy way where you just kind of blindly enter and then target the highs, that is a 4R trade, okay? That is the power of proper supply and demand zones. Okay, so now let's take a look at some live trade examples that I took live on stream. So these are real world examples that actually worked in real time, okay? So let's take a look at this example right here. This is going to be a short trade. So let's break down the setup, let's break down the example, and then we're going to go over to the live stream and actually watch the execution and the trade management in real time, okay? So take a look to the left, and what do we notice? We have that classic 2-candle pattern, right? Take a look. If we zoom in, okay, it's pretty clear that this is a consolidation candle versus a continuation candle, right? And that is not just a small continuation, right? We go and make new lows from this original point, right? So this is what we would consider an area of supply. Now, we actually already tested this area of supply in this example. And in fact, this is not just an area of supply, this is an order zone, because look, we have highs resting, equal highs resting just before that level of supply. So we have stop losses resting just above those highs, as well as orders from the supply level resting in this gray zone you see right here. And lo and behold, take a look, our first reaction was quite violent, all right? We go right into the zone, we take it out, we come right back down into the lows. I actually took this trade, but unfortunately I only got half of the profit, and then it came back up and touched my break even. But that doesn't mean that the trade is over, because we do get a second chance here. Why? Because we have a high still sitting at that level of supply. We have that level of supply, and then we have this high resting here. So liquidity is now resting above that high. And so technically, the zone that we would be trading would look something like this, right? You really only want to capture the orders that are resting above that high. That's the only place that I'm going to look for an entry. And so let's see what happens. We come back into that zone, and now we're starting to reject that zone. So let's jump on over to the live stream and see how I manage this trade. All right, so here we are on the stream. Again, live stream every day, so make sure you got those bell notification icons on so you get the notification when I'm live. But let's take a look here. We are trading the exact setup that I just showed you right over here. This is what we are trading on the live stream. Now, I'm going to look for an entry because we are rejecting. And let's just fast forward this a little bit. And spoiler alert, I do get short. So let me just skip to the part where I actually show my short position here. And here we go. Okay, so I'm going to actually show you the NinjaTrader position. This is just marking out my risk to reward. So you can see that I currently have a trade on that has a 4-to-1 risk to reward. And here is the actual trade on my NinjaTrader. Okay, so let's see what happens with this trade. As this thing kind of chops around, I'm already at a break-even point. We're kind of chopping around this area of demand here, which is kind of worrying me. I think we're going to go back up to my break-even. But as I was mentioning on the stream, there is nothing that I can do to force this to go lower. All I can do is pretty much wait, right? So I'm set at break-even, and I'm going to hold and wait for the trade to actually play out. I'm not going to just panic and exit out of this trade. I'm going to wait, and let me tell you, it is a pretty crazy journey because it keeps consolidating, comes all the way back up almost to my stop loss, misses my break even for, I don't know, maybe a few points, and then all of a sudden the market decides it's finally ready, and let's watch as the magic happens, the patience pays off, and we get that massive move lower, almost all the way down to full targets within just a few seconds. So here I am, I have my live trade open right over here on stream. I've already taken half the position off. I had 4 contracts, now I have 2. And now I'm going to probably, if I have to guess, trail the rest of the position. Yeah, there I am trailing the rest of the position. Following that price really closely, knowing that it can wick back up, and there is the entire exit. All of the trade exited right towards the lows. Okay, so that is exactly how you kind of manage these order zones or supply and demand, whatever you want to call them. And look at this. In fact, once we came down and took out those lows, price continued on higher, okay? So when you are trading supply and demand, you want to be trading not only with the trend, but you also want to make sure that once you actually start making those new lows or those new highs, you want to make sure that you are trailing your stop loss or taking some partials along the way, and you really want to be targeting new lows or new highs depending on the trend, and don't get greedy much after that. That's why if you watch the live streams, I'm usually trailing my stop loss as soon as we start getting towards that area, because I know that this exact situation can happen where we get a liquidity sweep of the lows and then a continuation higher, right? We take out those stop losses resting below these lows and then continue or reverse in the opposite direction. So that's live trade example number 1. So now let's take a look at a buying example. So in this example, I am also going to be trading live, but the only difference is now I'm looking to buy versus sell. Now the setup is going to look something like this. Why am I looking to buy there? Well, there's 2 reasons, and they're pretty obvious, right? This is a clear area of demand. Why? Because we have consolidation and then a continuation. Then we have some solid lows resting just above that level of demand. So now we have overlapping orders. So this is now an order zone. We've evolved from a level of demand, and now we are an order zone. Now, if you notice, we are making higher highs and higher lows, right? So that also checks out. We are looking for a trend continuation off of this area of demand slash bullish order zone, okay? So let's take a look at the live stream and see exactly what happened in this area. So here is that exact setup. Once again, this is my live stream. This was actually today, 11 hours ago, as of recording this. Okay, and you can see it's the exact same setup. Start dramatically dropping towards this area of demand, aka the order zone area, and that is where I'm going to look for a long. So let's watch as price initially starts getting into that area. Okay, and we're going to see a lot of volume, right? We got a lot of volume coming into that area. We obviously have a massive amount of momentum into that area because we have that massive candle right down into it. And so I'm going to wait a while. I'm going to wait for some confirmation, wait to see this zone is actually holding, and then I'm going to look for a long entry. Now, because of all of this selling momentum, even though we are in an uptrend, I am going to know and recognize that the probability of us going all the way back up to these highs are probably slim to none, and so I shoot for a little bit more conservative of a target, okay? So now let's fast forward a little bit and let's see what happens. So now we start to get some confirmation, right? We're starting to kind of consolidate and see some green out of the zone. And so by this point, I'm already convinced that this zone has the potential to hold, and so I enter a long position. So now let me fast forward. And we are going to watch as price kind of just consolidates in this area. If you know in the streams, that is my least favorite time of the day, is when we're consolidating in a zone. And slowly but surely, boom, we get that reaction, and boom, there is my position. My entry was in that chop, somewhere around that chop, and my stop loss was just below that green candle we got. And obviously now the trade is going in my favor, and so I'm immediately going to a break even. And now I'm basically saying, well, there's probably not a great chance that we're gonna get all the way back up to these highs. So I'm going to look for an exit somewhere towards these shorter term highs. Okay, and so let's keep fast forwarding. And let's watch as price continues on. And now as we get closer and closer to that area, I'm going to get more and more pessimistic about our chances of going higher. And so I'm going to aggressively start managing my risk once we're there. And I actually skipped over it. And so once we get this second push higher, I'm starting to see the signs that we're starting to slow down a little bit. And so if you can see on the screen down there, I'm trailing 2 out of the 3 contracts that I currently have on the position, and kind of just trying to see how much profit I can actually squeeze out of this move, because I have that gut feeling that we may not be able to hold on to the gains that we just made. Okay, this is something that just kind of comes with experience, kind of just a gut feeling thing. Sometimes my gut is wrong, sometimes my gut is right. In this case, I got lucky. All right, because as we will see, price pushes a little bit higher. Okay, and let's see, I'm still trailing the last of my position. And eventually it comes back down and takes out my trailing stop loss. So I've exited the entire position roughly right around here. But luckily, as the stream goes on, it actually comes all the way back down and would have been a break-even trade. So I kind of got lucky there. But that is another amazing example of an order zone. And these are not just hindsight examples, right? These are examples that I personally traded live on stream. So if you want to join the live streams, just make sure you got that bell notification icon on, you're subscribed, you're liking the video, you're using code SIMPLETRADER at Take Profit Trader and My Funded Futures, and code ST at Apex Trader Funding. And most importantly, you are in the free Discord and watching the free bootcamp. And then if you still need help after that, you're checking out the Simple Trader Blueprint, link in the description down below. You are always guaranteed the cheapest price, and it's a one-time purchase for life. You get an exclusive Discord membership, no monthly fees, and it's the cost of 2 evaluation accounts, right? So thank you guys so much for watching. I'll see you in the next video. Smash that like button and subscribe. Peace.